Hi guys, welcome to lesson 5 of our Training 101 course. In this video I'm going to be talking about what are the stock markets. If you haven't watched the other 4, please watch them in consecutive order and get to this video afterwards. Let's get straight into it. Before we get into the video, remember to like, comment and subscribe. I've got Facebook, Twitter and Instagram at The Not Trader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list and my Discord chat room. So what are the stock markets? A stock market is a collection of markets and exchanges that facilitate the buying, selling and issuance of shares of public held companies. But that's just the textbook definition. Let me give you a better way of conceptualizing the relationship between a company, the stock exchange and the stock market. Now if you want to buy a banana, you will have to normally go to a fruit and veg stand to buy a banana. Now a combination of several different fruit and veg stands could be called a grocery market, so like a market stall where there's lots of different fruit and veg stands all selling similar things or different things, but the collective of them together is called a market stall. So in that same way, if the banana is the company shares, the exchange is a singular fruit and veg store where it facilitates the buying and selling of fruits and veg, and the combination of several different fruit and veg stores together create the market, which is the same as stock market. So that's kind of a way of conceptualizing what the stock markets are. It's just a combination of several different stock exchanges which are segmented by region. So there's stock exchanges in different countries, and the collective of all these stock exchanges create the stock markets. Now while there's several different stock exchanges, there's about 16 that account for 80% of the global market capitalization. So there's only a few major players that really make the mass majority of the actual value of the world's stock markets. And just to really hit home, the New York Stock Exchange is bigger than the world's 50 smallest exchanges. So that really shows the disparity when it comes to how much weight the top few stock exchanges actually hold in the world economy when it comes to share market capitalization. But there's also 3 main types of stock markets. So when a company wants to go public, an investment bank will be tasked with issuing these shares via the primary market where institutional investors can buy the shares. Now the secondary market is where institutional and retail investors can buy and sell these shares through an auction process via the stock exchange. Now retail investors gain access to these stock exchanges through their brokerage trading platforms, which is why choosing the right trading platform is so important. And finally, you have the OTC market, which is over-the-counter market, which is where buyers and sellers can trade securities without any intermediary. Stocks that trade via the OTC are typically smaller companies that can't meet exchange listing requirements of formal exchanges. So you've got to be careful if you want to engage in OTC exchanges. But a lot of the time, retail traders don't really have access to these type of markets anyway.